All right, hello everyone. We're going to review the Robinhood portfolio for the month of April. Right now, the portfolio is up 1%. Let's take a look at the week stats. Week stats shows that I am down 0.65% for a loss of $185. And for the past month, I am up 11%, $2,883. For the past 3 months, I am still down big. I am down 14%. Let's take a look at my year chart. I am down 2%, and my all-time chart shows that I am up 2%. So it looks like the market is doing very well today, and we're going to quickly do this video. So let's take a look at some of the companies that I'm holding right now. You guys already know I'm holding Apple at 282. Nothing has changed, and I'm right back over the 1,000 threshold of total return, 57%. And today's return, I'm doing quite well on Apple, up $76. So again, it's just a solid holding. I would love to buy more, but again, the price is just so out of my average cost that I really can't buy no more Apple shares until it gets down to around $180. And even then, I thought that was a little bit expensive just buying there. I really think that Apple is worth around $150 worth of fair value. So I'm going to just hold on to my shares. I have 10 shares for a portfolio diversity of 9%. There's really nothing I can do with this company. All I can do is just hold on and just see what happens. So let's move on. Shell, $33.87, and I have 100 shares for average cost of $30.51. So my total return shows that I'm up 11% for a total gain of $339. Shell is number one on my buying list as far as the money that I have in my cash reserves. I have not put any money into the Robinhood portfolio yet. I'm still waiting to do that, but I'll probably put about $1,000 more. $1,000 more cash into the Robinhood portfolio, and I'm just waiting for Shell to get down to my average cost. So I'm looking for a buying point around $28, but unfortunately, Shell has not been dipping as far as we know. You guys know about the news about oil just being in this nasty correction phase, and it really hasn't dipped. It looks like $30 is a very good support level for this company. For the past 3 months, it's down. It's pretty much crashed. It's down 42%. But I'm really waiting for Shell to get back down to around $25 so I can buy some more shares of this company, because this will give me a dividend play of right now. My dividend play is around $94. So I want to get that over the $100 mark. And once I do that, then I'll probably turn off the buying for Shell. That's really not much to say about Shell. I'm just waiting to see this company go back down to around $28 before I start buying more shares of the company. So let's take a look at AVID. It is back up to $83, and I have a pending dividend return of $59. I'm just waiting to see, when that's going to pay out May 15th. So I have until May 15th until I get that money, that $59. This is just a solid holding for me at an average cost of $65. My total return is $890 for a 27% gain. Again, this is another one of those companies that I'm pretty satisfied with as far as like my position in the company. And like I said, I said this in a previous video, I don't like my companies being over 15% of a portfolio diversity, but I'm not going to really touch this. This is sort of like Apple. There's really not much I can do about it as far as is at $83. So it actually did get down to about 64, but I elected not to buy any more shares. I'm just going to sit and wait. I really don't have to do anything with this company. Not now, at least. I think they have a earnings report coming up. Do they? May 1st. So yeah, May 1st they have an earnings report coming up. CocaCola, $45. Looks like after hours just hit. 50 shares for average cost of $39. This money, this $2,000, I just put in Coca-Cola. I had no idea what I was going to really do with this money after selling Altria. I just think that Altria, for a company that's producing cigarettes and vaping, I just don't think that's going to fit with the business model now. You guys know about the coronavirus. I talked about in a previous video how coronavirus has really changed the way we've doing things. Social distancing, the stores being crowded and rushed over. I just don't see people taking off their mask and just start vaping and smoking and stuff. I still think that people that some people are still going to elect to do that. But I just wanted to be safe, and I pulled my money out of Altria, and I had about $2,271 just sitting there, and I just put it in a CocaCola, solid blue chip company. But I think they did have an earnings report, which they did beat, but I think guidance was lower due to coronavirus, and that caused it to drop a little bit. But I'm happy with my position in the company. This is money that we can do. We can do anything with this money. We can sell our Coca-Cola shares and put it into a bank stock, or we can put it into a utility. This is just money that's just being sat on. And my total return, I'm up 14%. So I'm just going to hold it out. I'm not going to do anything with this company. A lot of companies I'm just not doing anything with. These are companies that I'm focusing on, that I'm focusing on these companies during the coronavirus outbreak, because there's only certain companies that I feel is going to profit during these times. So Home Depot, 212, a very strong day today for Home Depot. I have an average cost of 153, and a total return is 38% for, it's over $1,000, the $1,000 threshold. So a very strong day from Home Depot. I'm not really sure why they had a good day, but this is just a really good stock, guys. This is an excellent company. This company is ran very well. They have all the experts in Home Depot, as far as people who have been in the industry for years on, and they provide you good insights on what you need to build a house, or they do sell masks. So I guess that's contributing to the profit gain that Home Depot is going through. It's just a solid company, a very, very good consumer discretionary stock that I'm happy I pulled my money out of Disney and I put it into Home Depot, because this would give me a really good dividend play. Not sort of like the fat dividends I'm getting from like Shell or PPO or ticker symbol on Realty Income, but it's just a solid company, and I would continue to hold, and I'm over $1,000 as far as my total return. AT&T were back down to $29. They just kind of had a flat day. The market seemed to open up pretty strong, or sort of decent, and then it just kind of just tanked. So my total shares is 140 for average cost of $34.47, and I am down $666 with this company for a total loss of 13%. So I mean, if you look at the previous video, I think I had like 100 shares. So we've added 40 more shares to AT&T, and I'm not done yet. I think AT&T is, I want to say, it's probably third on my buy list. It might be second. JP Morgan Chase and AT&T are kind of like flip-flopping as far as what I want to do with the company, but I want the big position in these companies. And I've always been in and out of AT&T. I've always been swing trading it. I've always been sort of buying into the high, but I did buy into the high in March, and that really came back to just sting me, because my total return, I was down almost $1,000 with this company, and I've just been averaging down my position. And I think that I will continue to buy this company, AT&T, because I don't think they're going to cut their dividend. This is pretty much a dividend play. And speaking of their great diversification and being a strong dividend play, sort of stock that I lean forward to. But this is a company that I will continue to buy around $28 to $29. So I'm not really worried about the portfolio diversity with this company. I know I mentioned before that I don't like my companies being over 15%, but I have to average down with this company. So this portfolio diversity might go up to 20%, just so I can get my average cost down to around $30 or so. That's the plan with AT&T. PPL, $25. It looks like PPL is actually $25.49. My phone's kind of laggy. Sorry about that, guys. Shares 150. So we've added more PPL, and I will continue to buy PPL. Shell and PPL sort of give me that diversification outside the United States, outside America. So I sort of focus on companies to be diversified outside of the U.S. I've added a couple more shares for an average cost of $23. So I think around $23 or so, this company is undervalued. I would continue to buy around that point. And I'm probably thinking around 250 shares to 500 shares of PPL. This is a pure bond replacement. I know a lot of people like to buy bonds, but the problem with bonds is that they don't return very well. They do pay some pretty nice dividends, but this is sort of like a bond replacement. I don't expect PPO to grow at all. It's down 17% for the past year, and the past 5 years it's down 23%. So this company has zero growth. Yeah, it's not really much to say about them as far as what they've been doing, but I think they do have an earnings report coming up. Yeah, at April 30th, they have an earnings report coming up, and I would just continue to wait, and if it dips, I'll just buy some more shares of the company. See, JPM $90. I have an upcoming dividend play of $31, and I have 41 shares. So average cost of $92.15 for a total loss of $69. So I'm down 1% with the company. JP Morgan. I said in the previous video, this is just a pure bank play. I think the best banks are Bank of America, J.P. Morgan, and Wells Fargo. I think those are the three well-known sort of solid picks as far as people buying banks. And if they want to be into the bank stocks, those are the three that people look at. I picked J.P. Morgan. I think it's undervalued here. I don't really pay attention too much to the P/E ratio because, again, the financial crisis pretty much lowered all the bank P/E ratios, and it could be a little bit misleading as far as banks being really low as far as their P/E ratio is concerned. But J.P. Morgan, I do feel, is a little bit undervalued here. I think this is a good place to start a position. If it gets down to around like the low, maybe like the high 70s or the low 80s, I definitely think that's undervalued. They're undervalued. The market is undervaluing the company. And pretty good company. These are the top three banks: Bank of America, J.P. Morgan, and Wells Fargo. So for me, this is just a company that I just picked. I didn't pick Bank of America. I didn't pick Wells Fargo. I went with J.P. Morgan. I should be rewarded a pretty good dividend, as you guys can see. Let's take a look. Our number of shares 35. So I got paid 96 for a number of shares of 35 when the ex-dividend date passed. So that'll give me $31.50 in play. And if you combine that with PPL, it'll raise my dividend potential for that month and the next 3 months to around, I think it's around $95. So I'm not quite over the 100 threshold yet, but I'm working on that just to try to get back to that being in that. All right, sorry about that, everyone. My camera sort of cut off on me as I was wrapping up the video. But let's quickly take a look at my companies once again. We were reviewing JP Morgan, and I said my dividend play was around $31.50. So I'm down $58 with the company. And again, this is just a pure bank play. I like the big banks, and I just want to be in JP Morgan Chase. So that's it for the portfolio. I know, sorry about how my camera just cut off on me like that, but we did sell a company, ticker symbol NNN, National Retail Properties, has been sold off. And the reason why I sold this off is because I didn't get the average price that I really wanted. I wanted to get the company around $27 or so. And this was not really a company that was really on my radar anyway. Ticker symbol O, Realty Income. They were on my list as far as buying, but I couldn't really buy it because it was around $55 or so. And to me, I'm just waiting for it to get back down to the low 40s before I start buying the company. So I sold this stock because even though real estate is going to be having some struggles with the coronavirus outbreak, I just don't see any end in sight as far as the virus is concerned. I don't see how there's going to be a vaccine generated anywhere within the next couple of months. And I just think that real estate right now is not where I want my money to be sitting in. Everybody's locked inside. Everybody's quarantining themselves. They're sort of having the social distancing going on. So I keep saying retail. Real estate is not where I want my money to be sitting in. I want my money to be sitting in things that people use. I want cell phones, AT&T, utilities. We're always going to need utilities during pandemic outbreak. Home Depot, people still are going to, fix houses. They're going to buy masks and stuff. I like that. I know gas and oil has not been doing well, but, we need to drive. So we need to drive. I like them. I like the oil play, especially now that oil has dipped so much. and it looks like in the after hours I'm down 0.3%. So that's just quickly to wrap up the video. I'm sorry about that, how my video just cut off like that. It just, I don't know what happened, but other than that, that's pretty much it. So I'll talk to you guys next time, and I hope everyone has a great day.